Good morning, everybody. Welcome to the morning check. It is the second day of July. We are looking at the NASDAQ. Let's switch to the ES, even though they're both showing about the same thing. So this is what the ES looks like. We had talked when we were up at the top of the range here that we might be looking at a move to the bottom of the range. It went to the bottom of the range. It tried to exceed it. Price was rejected at that level. We see the Morningstar pattern that's in place. And now this becomes a little bit of a tug of war between the buyers and the sellers here. First off, I should say, at 8:30 this morning, we have the non-farm payroll report, and anything can happen with that report. More often than not in recent years, it has pushed the market higher, but we know whenever we have a large data report like that, anything can happen with the markets. So we'll have to watch that at 8:30 and see what happens. It's just before 8 o'clock right now. We also, with that report, I should say that we know that the trading volume is going to be lighter than normal. Recently spoke to someone heading to the city, and the trains are rather empty. That's usually a kind of a good gauge as to what the volume is going to be like. And I'm sure the volume is going to be light today, but you've got to think that there's a lot of people hanging out for this non-farm payroll report. And then with the markets closed tomorrow, then I would expect, later this afternoon, let's say after 1 o'clock this afternoon, for the volume to be just extremely light. But right now we've held the bottom of the range in the indices, and we see price moving up. So we had the Morningstar yesterday. We said that the price was rejected. We expected some higher prices coming in. We moved through the power zone, and now it's actually the stochastics are in the basement. And with today's action, they'll probably start moving out of that. But we have a situation where we have the situation where we're working off a bullish pattern here, but we have a lot of resistance overhead. So there's going to be a big tug of war, like I said, between the buyers and the sellers. Around the gap, the 20-period moving average in another day or so is going to be at the top of the gap. Another important number is the 62% retracement level. So from this high down to this low, this price moves back up that 62% retracement level, which is right around the 2093 level. And we know that 2100 is another important support or resistance line, and we actually have another one here at around 2107. So there is a lot of resistance as price tries to move back up. Now, I think that the odds are pretty decent, but we have to see the next few days. But I think the odds are pretty decent that we might be in for a lower high here. But we really have to see what the reaction is today off the report, and then what the markets look like on Monday and Tuesday of next week when the volume is a little bit more normalized. Now we're into vacation time, so there's a lot of people that are on vacation this week, and there's going to be a lot of people on vacation through all of July and at least the first half of August. So the volumes are going to be relatively light, but at the same time they're going to be more normalized than they were this week because it's a big vacation week. So we'll be watching very closely how price reacts when it gets to the 10-period moving average. Well, I guess we have to start at the 38% retracement, which was today's high. What happens when it gets to the 10? What happens when it gets to the 50%? What happens when it gets to the 20-period moving average? What happens when it gets to the 62 and 2100 and 2107? So we'll evaluate all of those levels. If we look at, and right now it's relatively quiet. Futures are up 3 3/4 points, waiting on the non-farm payroll report. And here we see the NASDAQ 100, same deal, same thing going on. The numbers are changed, but everything else is the same. We're approaching the 38. We just saw the the S&P 500 hit the 38. This is just shy of it. Here's the gap. Here's the 10. Here's the 20. Here's the 50%. Here's the 62%. 4,500 is another number that we have to pay attention to if it gets above the 62. So same deal. We've got a bullish reversal pattern, but price is heading into resistance. We know that over the last several years, prices ignored resistance, and when we get a setup like this, price just blows right through it and creates a new all-time high. I'm not sure that that's going to happen this time, but we will watch price rather than just guess as to what we think is going to happen. The Dow is up 27 points right now. Same thing going on with the Dow. If we want to bring the Russell into play, which we do, this is what the Russell looks like. So it came down to a very important support area. As so far it's bounced off that support area. A little bit different in this than we've seen the other indexes where it rejected that higher price yesterday. Again, today it's trying to move up. Stochastics down to the basement, bounced off the basement door, and trying to head up here as well. So as a whole, though, the indices are looking like they want to go higher from here. Remember, anything can happen with the non-farm payroll report. The dollar index, I've been saying, looks like it wants to continue to trend higher, which would make the euro wanting to trend lower. The report today will have a definite impact on bonds and currencies. There is a possibility that the stock market is rather quiet depending on what the markets are. I'm sorry, depending on what the result of the report is. But I would expect the dollar and bonds to move on the report, and these are trying to push higher. We see the stochastics up around the 92 level. They're up on the upper Bollinger Band, but we have kind of a wide squeeze going on. Normally when we see this, prices continue to push higher. The 30-year T-bond, we see that it failed here. It failed with another lower high here. It's going to be coming down to this very important support level down in here, and if it starts breaking below that, we're going to look at this as a bearish continuation pattern and a breakout of the bearish continuation pattern if we get a closing confirmation below 147. We knew that the grains had a big rally off the report. So far they're just resting after that, pulling back just a little bit. Those are beans. This is corn, not resting after that. It rested for one day, and we've got a gap, bullish gap, and prices trying to move higher. And here we have wheat, similar to what we saw with beans. And this is what coffee looks like. It's still in this large triangle, and we'll see which way it wants to break out of that large triangle. And normally it will break in the direction of the prior trend. The prior trend here is down, so we go down. We go sideways for a long period of time. It makes a new low, but that new low doesn't go anywhere. It turns into a triangle. You would expect this to be a bearish continuation pattern. If we look at crude has been sideways. It came down to the lower end of the first target of the lower end of the range. Right now it's at 57.07. But this can come all the way down to 55.64 and still be in the larger range. This could end up to be a topping pattern, but we don't really know that yet. And gold is kind of failing here. We had gold holding this 1170-ish area, and right now we see gold pushing down lower. A lot of pressure on it. I've been looking for a long trade in gold for a long period of time. Nothing ever set up. I'm glad nothing ever set up because it's just not been any type of a good trade. Gold is another market that could have a large move based on what the non-farm payroll report is. Silver not down quite as much, but it's given us the same indication here, and this is what copper looks like, and we see that copper has moved down. Morningstar still going sideways. It's struggling with a lot of resistance here, and it really has to get above $2.75 to really get over that resistance. But the first resistance has been and continues to be that 20-period moving average. So by the time you watch this morning check, you're probably watching it from the website, the Shrewd Trading website that we've totally redone. I hope you enjoy the new website. If you have any issues with it or if you have any comments on it, you can send an email to info@shrewdtrading.com or, of course, Gary@shrewdtrading.com. We hope that you enjoy it. As you know, we pushed this out a little bit earlier, so you'll still see from day to day over the next week or two, you're still going to see some minor changes, but the vast majority is complete at this time. We're very happy with what it looks like, and hopefully it's a great resource for you. Everybody have a fantastic Independence Day weekend. Hopefully you have the opportunity to spend some time with your friends and family. We'll talk to you on Monday, which will be back to the normal schedule.